Colin Shah, Vice Chairman of the Gem and Jewelry Export Promotion Council, joins us right now on the show. Mr. Shah, good morning. Thanks so much for joining in on Bloomberg Quint. What's your sense of the normal practice? And I know of companies which operate out of SEEPs, for example. The normal practice was take the diamonds and stones either on loan or buy them, import them into India, get them into a jewelry piece and export them. There's a large import practice there. Does that get impacted as a result of RBI's directive yesterday?
See, this is a classic case of bolting the stable after the horses have left. But having said that, and I've been saying this on various forums last 2 weeks, the diamond trade did not use LoUs. This was a very isolated case. These two companies, allegedly, they're under investigation, but the diamond trade did not use LoUs anyway. So, there's zero to no impact. If LoUs go away, actually, we've been talking to the banks and the government to come out with a progressive diamond policy which mitigates the risk of the banks, but at the same time helps trade to get the finance it needs. If you look at it, hello, are we there?
We are there. Can hear you loud and clear.
Yeah. So if you look at the SMEs anyways struggled to get finance, will struggle more now to get finance. Their collateral limits were already like more than 100% of the loans that they asked for. Their interest rates were higher because they were not able to comply with all the rating requirements. So the SMEs continue to struggle. The large players never used LoUs or letters of comfort. What the trade uses is we have packing credit, post-shipment credit, and you have your long-term loans. Now, when you're sending import remittances or, buying gold from the bank, either you're buying it against the gold loan or you're paying out of your post-shipment credit or you're discounting bills. So having said that, the trade never used LoUs and LCs. Actually, all of us had to Google for the first 2 days to find out what is this LoU that became so famous in the last 2 weeks. So in answer to your question, the impact on the diamond trade for LoU, LC, manufacturers and SEEPs, I would say minimal to none. The impact will be on more the gold business, which was using LoUs, but against collateral. Now, it's unfortunate, but they will get impacted and they will have to move to, the LC or a bank guarantee kind of business, where their costs will go up by 0.5% to 1%. So it's a very competitive business. The margins are very low anyways. And, it's sad in some way that they will be impacted.
Right, Colin.
So, that's the trade perspective.
Colin, this is Vishwanath here. Just trying to understand how big this gold business that you talked about, how big would that be? What are the kind of companies, what are the sizes of companies that are we're dealing with at this point? And, if any, what could be the impact on banks that do business with them?
So, if you look at the gold loan book, which most of the banks have, and I wouldn't have the exact numbers, but having said that, the size of the Indian market is 2.5-3 lakh crores. Overall, the entire jewelry business, the gold loan book must be around 1 lakh crores. Having said that, most of, like any other business, it's 80-20. So the large players have a large chunk of the gold loans. And the large companies, which are, say, most of your listed, jewelry stock companies, and some of them are unlisted on their way to getting listing, but of significant scale and size. For the most part, they use either letter of credit or bank guarantee. That's the instrument they've been using. So we don't see much of an impact on them. There will be the small and mid-sized players where there will be an impact of this going away. In terms of the risk that the banks have, I would like to believe it's not so much because they all have a large collateral, and even the gold as a security. So gold is something which is, like any other commodity like steel, oil, cement. It's like it's easily tradable, easily disposable. So I wouldn't say that there's a large risk on that front. See, we must understand that there was no risk, and I think for the most part, the way lending is done in our country, the promoter, most of them, if you look at these jewelers, they're, more than 100-year-old shops, third, fourth generation. have a huge reputation in the particular town that they reside in. So I wouldn't say the banks were really at risk in any of these instruments. It's unfortunate that there were these two, again, alleged companies under investigation. It's one bank, one branch, two companies. So it's unfortunate that it's blown out of proportion and the entire industry is painted with that brush. But generally,
let's face it, Mr. Shah. I don't think this is targeted at a particular industry. I think it's for across importers, so not necessarily only for jewelry. Yeah, but I just have one final question here. I heard you mention that the smaller players which used LoUs might face difficulty. Would there be a freeze on credit, so to say, or would there be lack of availability of credit to do business, or will credit now come at a higher cost?
I don't think there'll be a freeze. In answer to your first question, there won't be any freeze at all. I think the banks in India, some of the public sector banks, they're 150 years old, 100 years old. They've been there before independence. So they do have a holistic view around it. 2008 also happened when we had a crisis. I guess this is our second crisis in at least my last 10, 15 years of active business life. And I think the banks are going to take a holistic view at it because 5 million people are employed. A lot of them are employed in the SME space. So I think they will continue to get credit, but they will have to make greater effort on compliance. So I think that's realistically what's going to happen because, the bankers, and rightfully so, they're going to try to mitigate their risk. If you were in the bank shoes, anybody would do that, right? Whether you're in the government of India shoes or Reserve Bank of India or bankers. So I'm sure they will give credit, but they will ask for more compliance. And I think the SMEs will have to get more compliant. But if you look at it, as a fellow Indian, and we're all patriotic here, the country has been moving in that direction over the last 2-3 years. We had demonetization, we had GST. There's been a lot of pain for everyone across the country, but over a period of 2-3 months, it's been accepted and it's moved on.
True.
So I think even in this case, maybe there's pain for the next couple of quarters while everyone has to reconcile to the new way of doing business. But I guess, then people will have to fall in, line.
Okay. Appreciate your time this morning, Mr. Shah. Thank you so much for taking the time out and speaking to us at Bloomberg Quint.
Thank you. Bye.